Well, let me start with you. There's a lot of talk about stablecoins actually as a big area of concern, one that might be kind of pulling the rug out from beneath this space. Do you think there's some merit in that?
For sure. Stablecoins are officially on the radar of regulators who are asking, are these coins really stable at all? And, this has been there's been an ongoing controversy about stablecoins like Tether or USDT. But the reason that they're in the spotlight now is that the market has just gotten so big.
This regulatory concern, do you think that's part, Kate, of what is moving the whole space lower, or are they just kind of getting wrapped up in whatever else is going on with markets here?
That's been part of the effect this year, more focus on regulation. There is that presidential panel, includes a bunch of different regulatory heads meeting about a dollar-pegged digital currency. Today, we had Jerome Powell saying last week that he's really not a fan of stable coins. He said there's really not the right framework right now, so that could be a hint that we'll see more of at least a regulatory framework, which some argue could be good for the crypto market in general. And he talked about the idea that you wouldn't need stable coins in some instances if they did have a U.S. digital currency. I was looking at Tether. Emily mentioned sort of the rise of that cryptocurrency. Kelly, you and I have talked about that. Back in April, when Bitcoin was around $60,000, the market cap of Tether was around $40 billion. Since Bitcoin has fallen, it's risen to about $60 billion. So analysts and traders I've been talking to say, watch the Tether market. When people leave Bitcoin, they're often not going back into a bank account. They would rather put their money on the sidelines in something like Tether so that if they do see an opportunity to get back in, they can quickly go in and out from an exchange versus really liquidating and going back into dollars. I think today is more macro-driven, though.
Shepard Smith here. Thanks for watching CNBC on YouTube.